Hello, everyone. Yours truly, Jimmy Williams again. I'm back with another informative conference call. I typically would say a video or, a recording where you'll see us face-to-face, but that's not the case today. Actually, guys, I have a special guest, and she's amazing. She's a CPA out of Houston, Texas, and I have some really good information I want her to come on and share with you guys, mainly regarding some of you want to be investors with my program. You want to come through my company to buy multifamily property. We're going to partner on certain deals, et cetera, et cetera. Or you are one of my elite level students and you're paying about $500 a month to have me, bring you through the training and get you properties, across the nation where we're going to be splitting profits. But my company does all the research. We find the properties. We vet those deals with my team. You use my financing sources, et cetera, et cetera. And all you do is you come to the table possibly maybe with your credit or something like that, or maybe closing costs. And we do most of the work. But the reason I brought her on is because some of you're having issues. You don't know how the tax laws work in your specific state. Some of you are in California. A lot of my students are in California and Texas. A few I have in Jersey, New York, and in Austin and some of the Midwest states and some in Miami. But the majority of you who are out west, taxes are really, really high in California. So I had one particular student, she's a partner of mine as well. Her name is Edna, and she's the main reason I'm doing this. But this is for everyone who follows me on social media. And her question was, okay, Jimmy, listen, we're going to buy property together. We're trying to find a property right over there in Las Vegas. And she said, hey, I'm 2 hours from Vegas. If we buy the property, I'll go and take a look at it. I'll help keep it up. But my issue is whenever we start cutting checks, and we split in profits 30-70 or 50-50, Jimmy, when you send me those checks every year, once a month, at the end of the year, if I'm filing the taxes, is there any kind of tax breaks for me? That was her big question. She wants to know how to file it, first of all, and is there any tax breaks? And, is it going to cost her more money just to get those checks, and is she going to have a heavy tax bill? That was her biggest concern. So I told her, I said, well, let me check with a certain CPA that I think who knows this industry. You guys know I have a few others, but the one I have today, she's specifically good at real estate. She has a lot of investors that come to her and they need certain tax breaks, or they want certain things done legally to make sure that, they get those write-offs. And she's a master at it. But before I bring her on, I'm going to read a little bit of her bio here, which I think is pretty amazing. Her name is Monica Garcia. She brings more than 27 years of diverse tax, financial, and business consulting experience as her role as a certified public accountant. She's a member of the American Institute of Certified Public Accountants. She's a licensed CPA in Florida. She earned her Bachelor of Business Administration and her accounting degree in Texas Southern University, and her Master's in Business Administration with a concentration in taxation from Sam Houston University. Now, what does she focus on? She's dedicated to helping clients achieve business success by helping them establish practical and sound tax and financial processes. Focused on services for small and medium-sized businesses, that would be you and I, as well as clients in the banking and financial industry. She's committed to delivering tax and financial services that meet each client's unique objectives. She's gained extensive accounting experience through various management roles for many companies as a CPA, and was as a CPA firm located here in Houston and in Orlando, Florida. Lastly, for small and medium-sized businesses, Monica has expertise in providing comprehensive accounting services, including individual, corporate, partnerships, nonprofit income tax returns, and audits, compilations, and payroll tax reports. In addition, Monica has expertise in consulting and human resources and supporting accounting systems. Lastly, this is not on here, but she was basically a genius, guys. Her IQ was extremely high in high school, and, you would have thought somebody like that would have been a doctor. But she went this route because she has the passion to do it. And I'll let her tell them a little bit more about herself. But without further ado, Monica Garcia, take it away, okay?
Thank you so much, Jimmy, and I thank you for allowing me to speak on this platform. And hopefully I can be of some assistance to your clients and students. I like you said, I am a CPA. I also have a master's in business administration. And what I pride myself most on is, even though taxation is probably the area that I'm strongest in, I do provide every back end support that you could think of. I even have people that send me, legal contracts to review because my rates are better than lawyers. So there really isn't anything that I can't do. But my purpose here is to talk more about taxation when it comes to real estate investments. I have a slew of investors mainly on the West Coast in California and Washington and Oregon. Some of them are just plain real estate investors, and that's all they do. Some of them are very high-earning doctors, lawyers, veterinarians, manufacturers who put their disposable income, their excess cash, they invest in real estate. And so I have become very well-versed in preparing returns for these different financial real estate transactions and helping my clients to lower their liability to the IRS as much as possible. I am not very straight-laced. I do not like the IRS. I am a complete advocate for my client, and I'm going to do everything I can to make sure you lower your liability as much as possible. When it comes to this specific instance, when you're doing a joint venture with someone else and investing in real estate, whether it be commercial or residential property, whether it is a short-term deal, meaning less than 1 year, or going to be an ongoing thing, there are ways that we can set it up from the beginning so that all the partners involved in any deal can save the most when it comes to their proceeds from these transactions. Preferably, most people usually will set these up as partnerships. The best two ways is to structure your company usually is going to be a partnership or an S-Corp. Now, the S-Corp is great because it's going to limit your personal liability. If something catastrophic were to happen, you have an S-Corp, no member of the S-Corp's personal assets can be touched. But there are other rules and stipulations that make some people go with partnerships because they have less requirements and fiduciary responsibilities than an S-Corp. In either way, you're taxed at the same tax rate. The company is not taxed for these proceeds. It is a straight pass-through. They're pass-through entities, partnerships, and S-Corps that will go straight to your personal taxes. So in these type transactions, whether it be a partnership or an S-Corp, you will get a K-1 at the end of the year, and it is taxed at a lower rate than if you were a sole proprietorship or a single member LLC filing things on the Schedule C. We never, ever, ever want to use use the Schedule C because that's going to make you incur an additional 15.3% on all of your earnings. So we definitely never want to be filing on the Schedule C. So in these situations, I would suggest. I'm sorry. Go ahead.
I was just saying okay, and I didn't mean to interrupt you, but I want.
Oh no, I hope I'm not going over anybody's head. I'm just, and this is all stuff that you can Google and look at S-Corp partnership and how things work and what the benefits and pros are to this. And one thing that I wanted to mention in particular, if anybody is interested in going into real estate transactions that are short term, less than a year, mostly flipping, there is something relatively new in the last 2 to 3 years with the IRS called a 1031 exchange. I mean, you can do more research on that, but what's beautiful about the 1031 exchange is it allows you to keep rolling forward the profit that you make on these transactions as long as you invest in something more than what you bought and it's less than 12 months. So that's a special little caveat. But when it comes to longer transactions, multifamily, and something that you're going to do on an ongoing basis, I can definitely help you set up or restructure what you're already doing so that you can have as little owed to the IRS as possible.
Okay, stick a pin right there. Fantastic. And I've heard of the 1030. I've heard of that, but never broke down in that way. So just to recap, for the sake of Edna, one of my clients, and there's 3 or 4 who wants to invest. So you're saying that the best thing to do is to get an S-Corp basically set it up like a partnership. And that's going to help us save taxes as opposed to going with one of my LLCs, because I have several companies that I wanted to do this with. But now that I've gotten the right tax and legal advice, we should just establish a new corporation, an S corp, and do it that way. And at the end of the year, I would send them, even though my company's doing all the work, we're going to buy the properties, we're going to split profits with the partner, we're going to send them the checks once a month. At the end of the year, we send them a K-1 form to fill out. Is that correct?
Well, the K-1, and I would actually, for these type transactions, suggest a partnership election rather than an S corp.
Okay.
So we would set up a partnership with the, and that's on a state and a federal level. And that way you can add unlimited amounts of partners later on if you want to. You can easily change the percentages of income or loss between the partners. And we, at the end of the year, they will receive I think it's by 2/15, a K-1 from us that details all the transactions that are pertinent to them as a partner in these ventures.
Thank you. Next question. So it looks like we're going to have to go through you, because my other CPA, he's good at other things, and he set up all my other 8 LLCs, but this is something different. This is a step higher. So me and my partner, Edna, and whoever else I partner with, we're going to go through you to set up that corporation and get everything set up. You know what I mean? What would that cost us? I mean, we just go buy our own corporation, and then we'll come to you and have you set everything else up, or how would that work? Or do we do everything through your company?
I always say I can do as little or as much as you want me to do. You can say, here's the info, and I will say, okay, it's going to cost this much to file in the state you're in, and to set up the correct election with the IRS, which is usually done at the same time. Once the state comes back with all the final information, then we go and apply for an EIN with the IRS and choose the tax election, which would probably be partnership at the same time. And my rates are super low. I mean, if you went and did your own state work and did everything with the Secretary of State in your state, and you just came to me and say, hey, here's the state paperwork, we formed a partnership, I would probably, I don't know, charge you like $100 to get your EIN and do your and do your election. Now, if you decided to go with an S corp, like I said, the benefit of that is there's no personal liability in in the event of something going wrong. And that's why some people choose S corp, especially if they have a lot of personal liability, or there's any threats of, just depending on what you think your liability could be, people would go with an S corp. Now, if I have to do an S corp election, it's an additional $200 because there's more paperwork involved. And just to give you an idea of my, tax rates, I mean, I see CPAs that will do, because when you do a partnership or an S corp, you have a completely separate tax return to do besides your 1040. It's called an 1120. 1120 for partnerships, or an 1120S for, it's both going to be done on 1120S. And I mean, you will find CPAs that will charge you up to $2,500 just to do one. My rate is well under 1,000. So you just cannot find a cheaper CPA. And the fact that I'm in Houston. I work off of Houston prices. When I deal with people in California and Washington and New York, they are just blown away at the level of my rates, because I'm cheap for Houston. So that means I'm super cheap for high-income cities.
Yeah, I'm in Atlanta, Georgia. And, again, like I said, I have 6 corporations here, and they're LLCs, and I have one in Delaware and I have one in Florida. But trust me, everything you're saying about CPAs, it can be very pricey, and rightfully so, because there's a lot of work you guys do. You do a lot of things.
There's a lot of work, but I also see that some CPAs they take advantage sometimes, because you don't know what you don't know, and they'll tell you, you think that it's some blown out thing, but it's not. And I'm very transparent about what I have to do and what I charge, and that's why my clients love me so much, because they know I'm not gouging them. I really, when you said I should have been a doctor, I really should have been a doctor, and I'm not. And this is the way that I help my fellow man. My little motto is, I'm going to give you expert consulting for mediocre prices because I just want to
Yeah.
help you grow. I start from the very bottom with people, and I go all the way to the top with them. And like I said, I can do as little or as much. Some people like to take things in their own hands and get the work done, and they just come to me when they get stuck or want advice or confirmation. And then I have something like, I don't want to deal with this at all. You go do everything. And I can work with any situation and all of them in between.
That's amazing. And Monica, listen, when I saw you and I saw the prices, I saw everything when I had that conversation with you, I knew that you're the person we were looking for. Again, there's certain CPAs that specialize in certain things, but when it gets to real estate, we're looking for a specific individual that can help us with taxes, especially cutting taxes across the board nationwide. And you checked all the boxes. So
and even beyond that with real estate, I am not just for individuals or corporations. If you have trust, estate, I know how to do that. Those type of taxation. I even know how to do nonprofit. Everybody buys real estate.
Really?
All of those different entities will purchase real estate because everybody wants to invest in land. It's always the best thing. And so I know how to do it from any standpoint. So you can't stop me when it comes to real estate and taxes.
Oh, wow. So, and trust is another thing my company we offer, that we have an attorney that sets up trust for our clients. Irrevocable trust, Cook Island trust, any kind of trust you name, we can do it. But we need someone like you to help us with the tax side of it. So that's good to know.
And
but
it's all about the little tips and tricks, and most people don't know about these things. Most don't know what options you have. Just the other day, I had someone that has a trust, and he wants to sell the property, and there's one way he could do it where he looks at the market value when the person purchased it or the market value now, and he didn't know that he had a choice. Of course, it's going to be when they bought it because it was 50 years ago, and that ends up being a huge tax savings for him when it comes to selling to purchase with this value versus that value, because that one's so much lower and you don't want to show that kind of capital gain. But there's a lot of CPAs that don't even know those little caveats that we're talking about, thousands, tens of thousands, hundreds of thousands that could be owed in tax liability if you don't know this and that. And I know this and that.
So you're saying basically, because I know a little bit about the trust because I'm getting into it now, but you're saying, let's say my father bought a property. My father has left us. He's no longer with us. But I'm just saying, if he bought something in 1975 for $50,000, right? Today that property is worth $1 million. Well, you're saying that if you don't know how to do the paperwork properly,
you might put down your CPA may put down the $50,000 cost. That means that you have a gain of $950,000 if you sold it for $1 million.
Absolutely.
But if you sold it for $1 million, it's worth $1 million. Then you have zero gains. It just depends on which approach you elect. And it's important that you know the differences, because $950,000 taxed at a 37% interest. We're talking about $275,000 in taxes that somebody can save you just by checking a different box. Absolutely.
Now I can tell you right now, my listeners, because some of them are sophisticated, some of them are just when it comes to real estate, they're really trying to win. And this language, this is their language that we're talking. Okay, even some of the basic newbies, they're starting to understand that trust is the way to go, and this is something that a lot of people are not talking about. So you got everybody really excited right now. So I want to recap.
Something else.
Sure.
I just wanted to say one more thing to go on what you were saying about, understanding and what level you are. I talk to people that have no business knowledge whatsoever, and I am able to communicate with everyone on their level so that they understand what I'm doing. I am not a CPA that wants to keep everything close to the best. I can educate you because you can never do this as well as me. So I don't mind sharing the knowledge and helping you understand, because you're supposed to understand what you're signing when you sign your tax documents, your responsibility, and that's what your signature means. And that's what I'm here for, to take it from an IRS code all the way down to your language, so we all know what's going on.
Amazing. And you said something important. So you're confident enough that you're willing to share. You're not trying to keep it a secret. And the 1%ers, some of the investors, people that got secrets of how money's made, some of them, for some reason, they want to hold on to it. They feel like sometimes it's not enough to go around. But if you know what you're doing, there's enough for everyone, right? And everybody
there's always
can win.
enough to go around. Like I said, and I like to say, it may be a little basic, but there's enough for us to all eat here. And I'm so confident in my abilities that I could tell you everything I know. You still can't be a better CPA than I. So why not share what I know so that we all have a better understanding of how this world works?
Wow, you are super confident. I love it. I actually love that. I just want to recap one thing before we go further, okay?
Mm-hmm.
So let's just deal with the one deal, the first deal, the deal I'm getting ready to do with my partner in California, okay? She's been a student of mine for about 5 years, off and on, and, she said, Jimmy, she told me this 5 years ago, I want to buy multifamily property. I want to have residual income coming in, and her biggest fear was the taxes part. I'm like, well, we can't be afraid to buy property because real estate is the best as far as investing to be able to save money with taxes if you know what you're doing, but we have to find the right CPA. So what we're going to do is she's about 2.5 hours from Vegas. She wants to live in Vegas, but she's still in the Los Angeles area, okay? So, but she said, Jimmy, I can't move there right now because, she went through a tough time through the pandemic. She's a dentist/investor. So, she's been having issues with bouncing back from the pandemic. But she said, if we can buy a property in Vegas, I'll take a look at the property. I'll go back and forth. But make sure you answer that question for me about my taxes. So I think she's happy about that. But we're looking at a property right now. Well, 3 properties, but the biggest one's like $25 million. Okay, so and we already have the financing secure. We're just working on the down payment and all that, et cetera, et cetera. What I want to tell you is, if we get this done, let's say January, right? Because we're looking 3 or 4 weeks. We go the entire year of 2024, and at the end of that year, that's when you would actually, you actually help us with the taxes for that the fiscal year 2024. Is that right?
Right. Exactly.
Okay, gotcha. Okay, because my other CPAs, I'm just letting them know when I start doing the real estate stuff, I'm working with someone else. I didn't tell them it's you, but you're going to be the person for that. Seriously. Okay, so I want to make sure we're clear on that. So it's
and I can help you set up and plan, along this 2024 as you get going. And one more thing that's important to note is California has huge state taxes. Nevada is one of the 6 states that have none. So doing business in Nevada is so good because, that income is excluded from your California personal income. So that's another benefit of just where you're doing business.
Fantastic. That's probably why she kept pushing the issue. She kept saying, I want to do it in Vegas. Okay, so and she knew that. And she kept telling me her taxes are really high in California. One last question.
It's one of the highest rates out of all the states is in California. Y'all just pay so much, and to me it looks so foreign because we pay none. So
that is amazing. Wow.
I hope the weather is worth it. Yes.
Right. And I have a lot of family and business partners in Florida, and they're saying they don't like it there either. So, but it's where you are. Everybody can't live everywhere.
Texas and Florida are both, personal tax exempt. Our sales tax is a little bit higher, but it makes a huge difference when it comes to tax time and how much of your earnings you get to keep. And so, it's hot as can be here, but we don't pay state taxes. So it's the reason that a lot of people are flocking here. So
fantastic. I'm like, save a spot for me.
But if you do business in other states that happen to be tax-free, that you can still reap that benefit, and that's what's going to happen here.
Okay. Wow. Awesome. One last question for you before I let you shift into. You had something else you wanted to share with me about funding with the SBA, and I think I have. Again, we're going to want to hear about that. But one thing I want to ask you is, so we've already answered the question for Edna, my first investor with this new project, but the others that live in other states, pretty much the system is still the same, correct? Everything we explained about what would happen with California, let's say someone's in New Jersey or Detroit, Michigan or Kansas City, it's the same. It's the same, basically.
It's going to be the same on a federal level, yes.
Okay, gotcha. All right, so you can go ahead and go because you have something you wanted to share, but I might just buy. We're thinking about buying some property here in Atlanta, Georgia, in my state. But that's it's not going to affect. It's not going to do anything different for the investor. It's still the same, even if it's in my own state as well, right?
And exactly, and that's true. Oh, and one more thing that I just ran up on 6 months ago that is brilliant. It's called, and you can do your own research. It's called a cost segregation study. And so when you have rental properties that you have, a landlord leasing relationship, you can get done what's called a cost segregation study, and that means instead when you depreciate your building, it's over. If it's commercial, it's over 27.5 years. But if you get a cost segregation study, you can write off almost all of it in your first year, and that can offset your gains on, gains on other, properties you might have been selling. Any high income you have, if you have high income that year, we can do a cost segregation study so that you can write off 90% instead of, 1/27th of it. So that's another important, huge thing that affects you as well.
I have never, ever heard of something like I got a few investors who are going to hear this, are going to be jumping around because they
I mean, it doesn't matter how long you've owned your property. If you want to write off a whole big bunch of it, get you a cost segregation specialist. And it's an engineering firm that does that report, but you have to have a CPA that's licensed in that state that can prepare that return. So I can only do the ones, where I'm licensed. So, this isn't, this is just information for y'all because we're talking about huge tax savings in the right situation.
Absolutely. So, guys, if you're listening out there, if you're a student of mine or if you're a colleague of mine, if you're in my big Facebook group with 36,000 members or on my email list, or if you see me, some of you don't follow me on YouTube and Facebook and Twitter, hey, listen, she's the person you need to talk to. And what states are you licensed in? I'm sorry, just Houston, just Texas? Or?
Just Texas right now, yes.
Okay, gotcha, yeah. But there's a lot of people in Texas. I probably have 25% of my following is in Texas. So guys,
and actually, let me rectify with this rule. It's where the property is located as to where you have to, the engineering firm, the CPA has to be within that state where the property is. So that's just a little caveat of doing this particular thing, but it's definitely worth your efforts.
Awesome. And at the end of the call, I want you to leave your, your contact information where you're comfortable. And guys, don't just blow up her phone with just, I know she doesn't mind taking calls, but be very intentional and make sure you know what you want to talk about because she's busy.
And text first.
You know what I mean?
Text first because I don't answer a lot. Lots of calls, but I answer really fast via text. So
absolutely. Yeah, okay. So you guys hear that? And a lot of people are like that now. People are not just picking up the phone for anybody. So
I will talk to you, but I need to schedule it because, it's just, a million things going on at once. So
totally understand. And that's how I'm the same way as well. I have a little calendar that I send out because if you don't, it's hard to organize your day. You can't take 10 calls that just pop up if you have 5 appointments. So,
Exactly.
And people understand that. And they listen, everybody that listens to me, most of them, they know I do have this little calendar. I put it in my email and they want to book a call or something. Or if I can't get to them, they talk to my assistant. But I got a feeling that you're going to probably your phone's going to blow up for the right reasons. Okay? So, all right?
And I'm so excited about it because the bigger the audience, the more people I get to talk to. And I just want to make good things happen for my clients. And then when you start making just a buttload of money, I can be the one to help you save on your taxes. So that's the goal for everybody. And I don't mind sharing and talking.
Thank you. Thank you very much. So in closing, let's talk a little bit about the SBA and that program because, again, there's a few people that's going to be on here.
Yeah, this is changing. This is changing my life, and it took it took everything that I've learned since I started in this industry at 16 up until now to be able to do this. But people, anybody that has a business, the SBA is touted by the bank you have your business account in. You're going to see the SBA all over the place. And what you'll soon come to realize is that, yes, the government will give you money for your business, but they are going to drown you in paperwork. And the process, I see the process go on for up to 2 years. So I have found a way to take that process from 18 to 24 months to 60 to 90 days. And what's beautiful about it is I get paid most of my fee on the back end, which means out of your loan proceeds, and I do all the work for you. And what's really special, and the reason that I'm even doing this, is that I know there's a matrix that I use, and so I know based off of 5 categories about your business, I know how much you will get your loan for, and I know whether you're going to be approved, because I'm not going to even begin until I know that you pass the 70 out of 100 that you have to get through this NACE. So there's not a subjective underwriting process. We know exactly what's going on, and the loan is 25 years, which you cannot get a business loan with that long of a payback anywhere. So there's some setbacks, but there are many benefits to working with the SBA, and I have made the process seamless and fast. And so I can also be reached to talk about that as well. It is for established businesses already, though, not startups.
Not startups. And let me just say this. So, guys, maybe about 5 or 10% of you guys back in 2020, 2021, you were reaching out to me and, you wanted to get into I had a program called the Business in a Box program where we went out, we bought the Age Corporation, we built it out for you, put trade lines on it, and you had to have good credit. Some of you had existing businesses, too, that was doing very well. But as well as I do, some of you, it took almost 18 months to get your money. Some of them got, like I said, the highest person I got funded was $340,000. The lowest was like $150,000, But it took forever. It was like pulling teeth. And we had to charge a phenomenal fee up front because of all the work we had to do, as far as
I can be very transparent in this. Like I said, it's for established businesses, and don't be mad at me. This is not for real estate investment, but it is for any other kind of company. And it's also, they really love people that are professionals like doctors, lawyers. They love people that are in a company already and own a minority share, want to buy everybody out. They love those. The reason that there's a matrix is so that if you're weak in one area out of the 5, but you're strong in the others, then you get to have your deal, so it's forgiving in a way. The only reason that you would be denied off the jump is if you were a felon or you owed and you were defaulted on your student loans, because that's their money too, and so they say, no, we won't deal with it. But if you had PPP, if you have EIDL loans that are still outstanding that you're paying on, that they just subtract it from what they would lend you. And so there are just this process. But I will say the minimum loan is $500,000, goes up to $5 million. But if you have multiple companies, like I have one guy I'm working with, he wanted a $9 million loan, so we did 5 on one and 4 on another. So so that's the range, $500,000 to $5 million. But another part of this that does tie into real estate is that a requirement of the loan is that you do have to spend even a small 10% even portion of how much they let you borrow buying commercial real estate. So,
I got you. All right.
So you have to invest in commercial real estate. And so, how you get it done, where you find the real estate, who does your deal, it can all tie into what you have going on right now.
That is fantastic. I have a major question too, and I keep saying I don't have more questions, but I'm trying to think how the listeners what they would ask. So this is for me personally, but I'm sure someone who's listening is going to think of the same thing. I've heard of being able to borrow money if I wanted to buy a franchise like a McDonald's or Burger King or something like that. It's already established. It makes let's say we buy one here in Atlanta, Georgia, downtown. It's generating $3 million a year. You know what I mean? And I want to come in and just purchase it. You know what I mean? And, is that possible? Do I need to have good credit? Or let's say this is something I'm thinking about too, my wife and I, buying an existing real estate company that has equity, you know what I mean? And it has revenue, with properties that we own and things of that nature.
Okay. Well, so I would have to check on the franchise, but basically this is, I'll tell you the 5 categories, let me do 4 categories. Let me tell you 4 categories that you can get 25 points in, and you can see how it all matches up together. So one is your credit score. 600 or less, you get 5 points. Like 6 and 650, you get 10 points, all the way up to 25, which is anything above 775, right? So that's how that goes. So that's that one bucket. You have another bucket with how much net income you have, and how if your company has been profitable year over year. So that's one particular calculation. The next bucket is management experience. How many years you've had a business. So you can go from, hey, I've managed a Bath and Body Works all the way up to I own a Bath and Body Works like company, and I've had it for more than 3 years, and that's when you get 25 points. So if you have not spent time owning and managing that particular business, which would be that instance, unless you had a mom and pop shop and then bought a franchise, then boom, you still max out because you owned and managed in that arena.
Fantastic.
So that's 25. So that's 25% of your matrix right there. So if you're very low where, hey, I just want to buy a franchise, then you get basically 0 for that category. So now we have to make sure you get your 70 points out of the other 4. I mean the other 3. And so that's why I said if you're very weak in one area, you have to be really strong in other ones, and that's why it's not subjective. It's very clear cut on what your score is. But that way, I don't waste your time or mine. I charge a very small admin. I charge a very small admin at the beginning. About 4 weeks into the process, when I submit, underwriting is going to want to pull $3,000 out of your bank for their admin fee, and then the rest of my fee, which I'll discuss, on a personal level, comes out of the loan proceeds at the end. So it is very little up front for the client, and I work with you, I do all the work. I will come to you for this, that, or the other. If I say I need, because literally I'll send you a list with 30 things, can you help me out with any of this? Whatever you don't have, I'm going to make it work, and I'm going to put this beautiful presentation together that the SBA is just going to jump all over, and that's why I can do it in 90 days instead of 2 years.
Wow, I'm like floored, and trust me, everybody listening, they know how hard this is to find people to do all the work up front. They know it's really hard. And if you come to me and I determine after a few questions, you're like 55 out of 100, you're just not there. We can then talk about the 4 categories and how we get you to a 70, and we can make a plan. There's a lot of people in my pipeline. I haven't started with them yet. We're doing the things. We're filing tax returns. We're amending tax returns. We're doing what we need to do to qualify and get those points. We're trying to get 70 out of 100, and we can work on different categories to get you higher, even if that means getting your credit score up. 20 points, which gives you might get you into the next one, which gives you another 5 points. So I work also at getting you to 70 points if you're not there when we first speak. You are absolutely incredible. I wish I could keep going, but we've been on almost an hour, and I know. Your time, this is supposed to be 10 minutes, but I want to say we appreciate you taking your time to share all that with us, okay? I got a feeling. I
love talking about it, so reach out to me.
I can tell, so before I go, so my wife has kind of been busy a little bit here, but she's in the background, and she runs all my companies. And for all the listeners, Arlene Williams, they've watched her behind the scenes help me build JW Acquisitions here in Atlanta. We started this company in 2019, and we started the Facebook group in 2018. And and we thought it would be at 50,000 members now, but we have 36,000 solid members, and she's a big reason for that. And so you haven't met her yet, so I just want to introduce you to her. And everybody else that's listening, listen. When you're trying to build something, you got to make sure you have all the right ingredients. And if you don't have a good CPA, that's like the major, I think, to me, one of the major ingredients. Because if you don't know the tax laws, you can get into a business and you're losing money. You don't know how to write things off.
It doesn't matter what you're doing. Money is affected, and money is what makes it happen. And so I'm the person that you want on your close team. You want me to be there because everything comes down to income and tax.
Wow. Awesome. Well, so I want to bring her on, let her say hello real quick to you, and most of my meetings that I do, but my wife's not on those calls, so I just want her to come on and say something. This is happy life, happy wife, happy life, right? and beside every great man is a great woman. I said beside, not behind, guys. Beside every great king is a great queen, and she's the reason for my success, us together. But Arlene, I want you to meet her and just say hello to my audience and just say hello to Monica, okay?
Hi, Monica. It is a blessing to meet you.
Thank you so much. It's a pleasure.
Sorry, I was like, I hope I didn't overwhelm already.
Oh, my God. I love it.
I've been hearing all wonderful, wonderful things. I'm kind of to myself because I am handling a lot of operation stuff and I'm handling my own businesses. But it is a pleasure to meet you, and I know you provided invaluable information because I've been kind of eavesdropping and listening.
Yes.
So, I mean, amazing, amazing, amazing. I am looking forward to working with you personally. And, you know, I just am excited for all the clients that are going to hear this and are really going to benefit from it. So it was a pleasure meeting you, and I look forward to speaking with you again, Monica.
Yeah, we're going to speak soon. It's going to be great.
Absolutely.
Yeah. And again, Monica, thank you for your time. Thanks, honey, for saying hello, because she's always in the background. She doesn't talk. But I'm trying to push it to the front, you know what I mean? Good luck on that one, right? But she's amazing. And so are you, Monica. What I want you to do, if you can give them a contact phone number. You don't have to give out your cell if you have a business line or something where they can reach you, and you can tell them to text you first, and or your email address. And guys, when you do that, you have to let her know, hey, I listened to the podcast, because I have a podcast. I'm going to put this on there as well. And you listen to the conference call, and you're with Jimmy Williams' team. You want more information on et cetera. Is there a way for them to contact you? And do you have, you can get phone number and email address wherever you want, okay, or your website?
Okay, so website is Kate Mary Financials .com, and my email address is mmgarcia@kmfinancials.com. And you can text me. You can call. Can't promise the answer, but if you text, I will always respond very quickly to 713-906-8434. One more time, 713-906-8434. I would love a text from you, love an email. We can discuss anything and everything. We are going into tax season, so I get to, I try to respond as soon as possible, though, even if it's to say, hey, I want to talk about this, but let's schedule a time, because, I'm open to everybody. And I work in all 50 states. I cover all 50 states. So I like to be that one where you're like, hey, I heard about this. Who could I ask? I could text Monica and she'll know about this, or she'll go find out. I want to be that person for you.
Wow, Monica. Listen, I think I speak for everyone. We got more than what we bargained for today. And seriously, and the way we will show you our appreciation is we're going to make sure that we send you quality leads, my company and I. And when you get people that have never contacted me, they may go directly to you. Just give me feedback on the responses, and we'll make this worthwhile for you as well, okay? And I'll be back in touch again because I'm sure my companies are going to want some funding from you. We'll talk some more later this week. But I'm so
happy to be on your team, and thanks for inviting me on. It's been a blessing. Thank you.
No, sister, we are on your team. I mean, I have about 4 or 5 other. Seriously, I have a CPA in Georgia, we're in your state. I have somebody in Cleveland, Ohio, and I have someone in California. But none of them can do what you're doing. It's not that they can't. I don't think they specialize in it. But finding you has been a godsend for our team, because now we're trying to really scale the real estate side of things, because real estate stands the test of time. And I think
I was just going to say that it's timeless, and it's always going to be a good investment. Sometimes more than others, but always a good investment, and everything appreciates. So real estate's where it's at.
Yeah, and I feel you can scale easier, and I think the tax laws with this country is more governed for real estate investors, particularly multifamily. I think single family too, but you're buying land development or real estate development or multifamily properties and things of that nature. You ain't got to pay like 30 and 40% back to the IRS if you know what you're doing. I learned that a long time ago. I just didn't know how to find the right CPA. So again, we appreciate you. Okay.
I appreciate y'all as well, and I'm here for whatever you need.
Okay, and as I always say to my audience, I'll see you guys at the top on the next video, podcast, or conference call. Peace and blessings, everyone. Bye.